Greetings everyone, this is Major and today is December 15th and today's topic is the big topic that everyone is talking about, whether Bitcoin is a bubble. And the simple answer to me is no. And I will explain the reason why the answer is no, because Bitcoin, everyone's looking at Bitcoin's price and saying, well, it's a bubble because look at the price. You know, the price action is driving everyone crazy. And a lot of the people that it's driving crazy are looking at the price relatively, they're just really coming to the party. The CNBCs and the Wall Street people are really just now coming and seeing it, at 1,000 and looking at how it went from 1,000 to 17,000 plus, and are just dumbfounded by this. But why it's making these moves is what they don't understand. They don't understand it because this is the first asset class that I know of, and if someone knows something different, that is really operating in a true free market. Meaning, yes, is there some manipulation? There's manipulation in all markets, it's just to the degree. And I would say right now, we're probably operating in a market where the degree of manipulation is less than other markets that are out there. So what does that mean? That means that you're really looking at a true supply and demand market. Simple. The supply of Bitcoin versus the demand. Bitcoin is an asset that operates on a global scale. So what does that mean? Well, every other asset really operates in a regional space. NASDAQ, the New York Stock Exchange, the Venezuelan Stock Exchange. Every country has their own marketplace, and they have assets that are on those marketplaces and that they control. Even oil really operates on a regional, so down in South America, they really control how the price and action of the oil that they have operates on their markets, different than maybe in America. WTI and what the Saudis and OPEC say about oil, still the Saudis can say one thing, and then still places like Nigeria will say something else. So places like Venezuela will say something different. So this is not really, Bitcoin is the first asset that really doesn't operate in a regional, local way, and it's not managed in any way really at a local level. So the same Bitcoin that is bought and sold here in the US is the same Bitcoin that someone in Russia is trying to buy, that someone in China is trying to buy. So it's nothing different. Oil has many different variables: light, sweet, crude, jet fuel. All these different components really is what makes up the oil market. But there's only one Bitcoin, and that one asset, which is very limited in supply, is being sought after by a global market, which doesn't really happen a lot. I can't remember until you go back to the days of actual gold, when it was really just a physical product that you really, and even gold was really dependent on. So when people say gold is finite, it's not. Every day there's potential of possibility of new gold finds. You don't have a new Bitcoin find. You know, the Bitcoins, that's it. It's what was created. So there's no way to find, another 10 million Bitcoins. It's just what it is. So the parameters of this asset class is totally different than pretty much any other asset class that there is. And hence, the price is going to reflect that. Now, let's talk more specifically about that price action. What happens is that people are looking at the price because it's in an unregulated, unmanaged, unmanipulated space. And they're not used to that. So what that means is, think about stock price. Look at a company like Berkshire Hathaway, right? Berkshire Hathaway stock, their Class A stock, has never been, there's never been a stock split. From that company was created till today, the stock price has just been left alone. No stock splits and this, nothing has been done. And what is the price? Berkshire Hathaway stock price of their Class A shares, it's almost 300,000, around 296, 97, something like that. But almost $300,000 for one share because it's not been managed, manipulated. No one came out and said, hey, let's cut this price so that it doesn't look as large. That's what happens. Any of these. Okay, so what did they do? They created a Class B share, and that price took off, right? So they, in around 2010, had to manage that price. So they said, okay, we're not going to manage and manipulate our Class A shares, but we're going to manage and, the Class B that we created for the smaller guys. Well, that price started to take off and ran up almost to 3,500. Right? So what did they do? They did a 50-to-1 stock split. 50-to-1. That's managing the price. We don't want the price to be that high. So we're going to manage it and do a stock split so that psychologically you don't see this price being, oh wow, it's 300,000 or it's 3,500. I can't get in, or I can't participate now because the price is 3,500 or the price is 300,000. Think about it. 300,000. If you don't have 300,000, you cannot buy a share of Berkshire Hathaway stock. One share. And you don't really just buy one share. To really participate with Berkshire Hathaway, you've got to really come with a couple of $1 million, that's excess of 3 to 30 million to really say you are doing anything in regards to Berkshire Hathaway stock. So that's what happens when you don't have people managing and manipulating the price to play psychological games. That's what's happening in Bitcoin. No one is managing that price until now. That's what the CBOE futures and Wall Street is trying to do, is to manage that price, because this is why. Unlike Berkshire Hathaway or even Apple, Apple's price was taking off. So Apple had a meeting. So it's not conspiracy theory. This is what happened. They meet and they say, you know what? We are going to manage that price, manipulate that price so that it looks smaller to the eyes of the public. So what we're going to do, we're going to do a 7-to-1 stock split so that the price looks smaller, but now we've issued more shares. So there are more shares just at a lower price. If you could do that with Bitcoin, you would just have to issue more Bitcoins and bring the price down. But that doesn't happen because the cryptography prevents that from happening. So you can't just issue more shares. So if you want to buy a Bitcoin, you're going to have to pay whatever the market price is, just like you have to pay whatever the market price is for Berkshire Hathaway stock. That's it. It's very simple. It's not a bubble. Did you ever hear somebody say Berkshire Hathaway stock is in a bubble because of its price? Its price is outrageous. If you're talking price, 300,000, we should all say that's outrageous, but we don't, because there's a lot of reasons why they don't, but they don't say it's outrageous. They say Bitcoin is outrageous. Bitcoin is a bubble because it's operating in a non-regulated, non-managed, non-manipulated space. That's what you're looking at, because the real reason is that they have to manage this price, because, see, unlike any other asset class, what happens with what's available and what Bitcoin enables is anyone to participate at any level. So regardless of what the price is, the price could go up to, okay, let's compare and contrast Berkshire Hathaway to Bitcoin. If Berkshire Hathaway stock at 300,000, because you can't buy a fraction of Berkshire Hathaway. You can't say, oh, I like Berkshire Hathaway stock, and I've got $3,000 and I have 30,000 and I want 10%. No, you can't do that. But with Bitcoin, you can. Regardless of what the price is, you can still participate and receive whatever those gains are in percentage terms. So if Bitcoin goes up 100%, if you're going to get that same 100% gain that the person that owns a whole Bitcoin, you're going to see the same 100% gain, even if you just put in $1,000, $2,000, $500. See, because of its factor that it's divisible, anyone in the world, and this is what really scares them, because when you talk about a bubble, less than 1% of the world is involved in this thing. Okay? But anybody can get involved. The barrier to entry to get involved is non-existent. So what does that mean? That means when people start waking up and understanding, oh, 17,000, 20,000, even 100,000 price does not preclude me from getting involved. Even at $100,000 price for Bitcoin, a person with $1,000 can still get involved. A person with $500 can still get involved. That's a huge difference. Everybody else has to dilute, stock splits, do all these different kinds of gimmicks in order to bring down their price, in order to make it easier for people to get involved. Bitcoin doesn't have to do that. This is what is scary, because now when people really understand that, they're going to flood in. So is it a bubble? Nowhere near that yet. You get to bubble territory when you really see, a good percentage of the population really getting involved. And we're nowhere near that right now. So with those fundamentals, that fundamental thinking and reasoning, I hope you understand that Bitcoin is nowhere near a bubble, not yet. Have a good day.